American investor Philip Fisher had famously said, "The stock market is filled with individuals who know the price of everything, but the value of nothing." Namaste everyone, welcome to our YouTube channel. I am Pooja Sharma. In today's video, we are going to talk about a topic which we all think we know, but very few actually do. We are going to talk about what is a share of a company and what makes the stock market such a unique place to be part of. So let's get started. First, what is a share? We're surrounded by thousands of brands like Amazon, Flipkart, Nykaa, Myntra, Ajio, Paytm, Groww, Upstox, etc. etc. These brands are owned by companies. And these companies, they need capital, they need funds to expand and grow their businesses and also for day-to-day business operations. These companies need money because money is the basic unit of business. Now, there are two ways through which the company can raise capital or funds. One is through debt and the other one is through equity. Debt is the most popular way of raising funds, wherein the company goes to the bank, asks for the loan, the bank in return gives the money, and in return the company has to pay interest on the money they have taken. Another way of raising the funds is through equity, wherein the company issues the shares of the company. The company's entire capital is divided into smaller units called shares. A share is a term used to describe the part ownership of the company. If you own the share of a company, it means that you enjoy ownership in that company, which further means that you will be entitled to a portion of earnings in that company. For example, if today I buy the share of this company ITC, then I become the part owner of ITC, and in the capacity of investor, I am entitled to receive a percentage of profits that ITC is going to make. So how does this distribution of profits take place? So the company will earn money in the form of revenue or sales. Then it will do a lot of expenses, which will be deducted from the revenue. Then the company will be paying taxes. And then whatever is left after paying the taxes, it is either distributed in the form of dividend or is capitalized back into the business in the form of retained earnings, which can be used in the future for various purposes. The real benefit of becoming an investor in the company is that your liability is only limited to the amount invested in that company, which means that despite being the owner of the company, you don't have to take part in the losses. You don't have to bear the losses beyond your investment value. Now let us see 4 unique points about stock market which you won't find in any other market around the world. Number 1, price discovery. The stock market serves as the meeting place for buyers and sellers. It facilitates fair and transparent valuation of the stock because the stocks or the shares, they are valued and priced on the basis of demand and supply. When a company is predicted to perform well, the demand for that particular share is going to rise, and ultimately the stock price of that company is also going to rise. Number 2, liquidity. Unlike real estate, stock market provides with an easy opportunity to buy and sell the shares as and when desired. This ensures liquidity and it provides great deal of convenience to all the investors. Number 3, starting with a small capital. You can start your investment in stock market with as low as 100 rupees. So not having a huge capital is not an obstacle here. Number 4, expansion of business. Any listed company can meet the need for funds required to expand the business by issuing shares in the stock market. The investors or the shareholders, they give money to the company, and in return the company has to issue shares and give a fraction of ownership in the entire company to the shareholders. And when the company grows or when its share price rises, this increases the wealth of the shareholders or investors. Let me share an interesting story with you all. In 1981, when N.R. Narayan Murthy ji with 6 of his close friends started Infosys, it wasn't making big money because India as a country at that time had still not opened itself to foreign investors. It was only in 1991 with Dr. Manmohan Singh ji's historic 1991 budget that the economic revival of India started. Up until then, the foreign investors were not allowed to hold shares of the Indian company, and the stock markets were still reeling under the Harshad Mehta scam. Then in 1993, the things started to change for Infosys after it went public. Many people were not investing as they were skeptical to invest in a company that doesn't have any labor or plant or machinery. A handful of investors who invested merely rupees 10,000 have become multi-millionaires today. And the rest, as they say, is history, with Infosys coming at par with Tata's. Today, Narayan Murthyji's wealth is around 400 crores US dollars. This is the power of stock market. What we must take away from the story is that stock market is needed for the economic growth of the country. By issuing shares to investors, the corporate sector can raise funds and use that money in expanding their business and scaling up their operations, which ultimately is going to give a boost to the economy of our country. It should not be looked upon as a place to gamble, but rather it should be looked upon as a place to invest and let your money grow. In the next video, we are going to see the different ways through which investors can earn money through stock market. If you like this video, give this video a big thumbs up and make sure that you share this video with at least 5 people. When you share a video with any of your friends, YouTube understands that this content is worth sharing. And when it understands that the content is worth sharing, then it pushes the content to more and more people. So by sharing the content, you're helping our channel to grow, and we really owe this to you. That's all for now. Until next time. Till then, namaste, bye bye, and take care.